and I am very pleasure to be here to share with every one of you in the room here about some of the very interesting facts about our current real estate market. Yeah, so this is something that I have put together for everybody. I hope I'm able to use only about 1 hour thereabout to deliver all this very important content to all of you, so you guys can just grab a cup of coffee, or like what Justin said, if you have not have your dinner, you can actually bring your dinner. You can at the same time watch what I have to share to all of you tonight, right? So give me a second. I just want to do a screen sharing, everybody. Very good. I still see a lot of you are still coming into the room. That's good. Give me a lot of energy, right? Okay, my topic today will be timing and price gap. And I think this is one of the very relevant topics for today's market, because we have seen actually the real estate pricing has rocketed a lot in the last few years. Until today, we are still seeing the price still increasing launches after launches, right? So is this already a good timing for everybody to invest in today's market? And is there an opportunity in terms of the pricing? So that is what I'm going to share with all of you. And I'm going to use some of the historical data, right? Because I believe in terms of property investment, there's always a patterns and there's always a cycle. Right? If we are able to study in depth into what is actually happening in the past, we will be able to maybe gain some insights on, what kind of property you are able to invest now, and what are the things that you are able to take advantage of. So that is what I'm going to share with every one of you, right? So if you are ready, give me a 1. Everybody, give me a 1 so that I know you are all ready, and I'm going to dive into what I'm going to share with all of you tonight. Thank you, Jimmy, Eunice. Thank you, Ernest. Thank you, Carol. Thank you very much, Doris. Thank you, Suchi. Thank you very much, Grace. Yes, everybody, thank you very much, Sherry. Yes, so this is what I'm going to share. And tonight, before I go into my slides, I think I have to introduce something about myself. So I'm a Senior Associate Group District Director in PropNex with 25 years of experience. So I've seen actually 2 decades of the cycle up and down in Singapore real estate market. I'm a team leader in PropNex, a trainer, and I'm also a project chief IC, right? And in terms of the signature bootcamp program, I'm one of the DY Master Chief Facilitators. So these are something that I'm involved very heavily and actively in PropNex, right? And in terms of training, these are some of the pictures taken. You can see actually a big group of agents that I have ever trained before. And I'm also one of the Property Consumer Seminar keynote speakers. These are some of the seminars that I've conducted for the landed property. And of course, I've actually done a lot of new launches as well as a keynote speaker for our consumer seminars. These are some of the posters actually taken last time. Right, these are all the seminars that I've conducted before. And the H Property also featured me on their magazine, right, in one of the topic about landed property. Right, so this is actually the thing that they have featured on their magazine. Yeah, back then in a few years back, I think. Yeah, can't remember which year. Okay. Yeah, so today I have a lot of data to share with all of you. And all these data are plugged from our investment suite. So what is investment suite? Investment suite, in fact, is actually a data, a software that capture all the transaction data for different type of property, in terms of the, for example, HDB, condo, landed, even up to commercial or industrial. In all the PropNex agent, we are able to access to this database, and this database can do a lot of things. Like, for example, if I need to study certain trend, we are able to filter into the right attributes that I want, and I can study a trend, so that this trend are able to actually help me to do a more informed decision in terms of property investment, right? So are able to approach any of the PropNex agent who has actually invited you here, they are able to do some research for you in case if you got any doubts, right? So all the data that I'm going to show to all of you tonight is actually pulling out, majority of them are pulling out from this platform, and this platform pull data from URA. So the data, actually, they are all very accurate data, right? So of course, investment is actually a big ticket item. So I still need all of you to do your due diligence. If you are not sure, you can always approach our PropNex agent, right? They are able to give you some advice on this. Right, so without further ado, let me dive into the first slide. I'm going to give you a little bit of the fundamental tonight, right? So look at the what I call it, the stock availability in terms of the new launch, in terms of the new housing, right, private housing. We are talking about 16,000 plus unit as of Q4 2023. Right, and break into CCR, RCR, and OCR. So we have like 5,000 over in CCR and RCR. We have 5,000, and OCR we have 5,900. Yeah, and if we are going to do an annual consumption based on from 2010 to 2023, 13 years, we can see that actually every year consumption for CCR is about 1,500 units. For RCR, about 3,006, and OCR, we are talking about 6,000 units. Yeah, so based on 16,000 units, what we are able to consume away is only for CCR, we just need slightly below 4 years to finish off all the 5,000 over units. And for RCR, it's even faster. Well, we just need 1.37 years. We are able to clear out the 5,000 units, and for OCR, we are talking about less than a year. So in fact, based on the numbers that we've seen here, the stock, in fact, is not a lot, it's not a lot, right? Yeah, so that's something that I want everybody to pay attention to, because you might think that we have a lot of stocks or a lot of launches in the market right now, but in fact, we don't have a lot, because if you base on the data, it will only take a few years. Less than 3 years, you'll clear out everything, right? So this is something that maybe you want to take note. And, right, look at this Jurong East Jaden actually are selling very well, and we have sold 88% last year November, right? And we are talking about a price of $2,451 per square foot. I think that is actually really quite amazing for OCR in Jurong. We are able to clock this amount. Of course, this is actually a very good project, capital land, and it's in the second CBD area. Right, so the take-up rate, in fact, was very, very strong back then. Right, and 2,451 per square foot average. We can actually see the highest we reached $2,824 per square foot. I think that is actually amazing, right? For OCR, it's actually a new record found in OCR. And after that, Lentor mentioned, in March, we managed to move like 75% of the units. And the price we are talking about is actually $2,001 to $2,478 range. Yeah, so this proves that the OCR 99 years project, in fact, are all going above $2,000 per square foot, and buyer, they are able to accept. Right, that's why we have seen such a strong take-up rate in Lentor Mansion. Right, a very nice project by Rocco Land. Definitely. Yeah, this area is under big transformation, and we have actually quite a few projects in that particular cluster, and they are all moving very well, even though it's actually above $2,000 over per square foot. Right, buyer, they are able to accept today. Right, even it's OCR. Yes, so this graph, I think this graph is a very insightful graph. Right, first of all, there are many things that we are able to study from this graph. Right, this is actually a PPI index, way back from 1997 all the way to 2024. Yeah, so from here we are able to see the red color one is of course the property index price actually dropped down, and the black color we can see is actually all the positive cycles. Yeah, so from here we can see the first thing we are able to study from this graph, the positive cycle are always actually higher or much more compared to the negative cycle in term of the percentage, right? In terms of the percentage, and this is especially true when after 2013, this portion onwards, right? You can see all this bar, in fact, is the cooling measure introduced by government. You can see how many times the government has introduced the cooling measure, right? Starting from 2009, Q3, all the way to 2013, right? So you are able to see every new low point is higher than the previous low point, right? Every low point is higher than the previous low point, and every high point, in fact, is actually higher than the previous high. So that is the trend that we are talking about. And from this graph, I also want to actually draw your attention to maybe after 2013. You can see this is actually the very important cooling measure that government has actually put in place. And after 2013, right, we see the market having some correction, right? It has came down by 11.6% in the 15th quarter, right? So this cooling measure, in fact, is actually government, or they come out a cooling measure called the TDSR. So it's total debt servicing ratio. They control the buyer how much they are able to borrow based on their income, right? So there's a formula to calculate, and they cannot use. They only are able to use, back then was 60%, now drop down to 50%. Yes, so this is something that they have put in place, and this is a very important thing, because after this, we never see speculating activities in the real estate anymore, right? People buy when they are able to afford. They are not able to speculate, because everything will be so transparent, especially, whatever income they earn, they go to bank A or bank B or bank C, bank D. Everybody are able to see how much they earn and whether are they having any housing loan at the moment or not, right? So that will stop people from over leverage. Yeah, and once government removes this over leverage thing, we can see the property market actually become more healthier, right? After you do some collection during this period, right? Then after it's steadily actually heading upwards, very beautiful and very steadily, right? It's only when until this period 2022, government implemented another cooling measure, which is they increased the ABSD for Singaporeans who buy the second property up to they increased from 17 to 20%, right? And for PR also, they have increased to 30%. And of course, the foreigner hit the most, they have increased the percentage to 60%, right? So that is something here, and we have experienced a 0.2% drop, right? Then after that, the market start to turn up again, and today, even the Q1 2024, we are looking at a 1.5% quarter-on-quarter kind of increment, right? So the market actually has inched up a little bit, even though we have actually faced a lot of turbulence in the last year, and of course the interest rate was still at the high, but everybody are predicting that the interest rate is coming down. So maybe after the Q2, from July onwards, we will have much more complete evidence of the interest rate situation in Singapore, right? So right now we are still at that rate, but we know that is actually the max. Eventually we will start to head down if the inflation rate is being under control, right? So this graph also actually tell us something very, very important, right? For example, I'm sure you heard about your friends or even your customers. Some of them, they buy property, but they never able to see profits. Yeah, so that is something that we can actually derive from this graph as well. For example, if you actually buy a property in 2013 here, right, then by holding for 5 years, then the market start to come down, and by holding for 5 years, you start to sell here, for example. Then by buying at the highest point, before the market pick up, you go and sell away, of course, you are not able to see any profits, Because before you want to sell, there are also other new launches in the market whereby you actually eat up your market share and buyer tends to go and buy the new launches. Yeah, so what I'm trying to say here is time the market, the right time to enter with the right entry price, in fact, is one of the most important things that will allow you to actually make the most in your property investment cycle. Right, so this is a PPI index. I think is quite useful, and it really let us see that the Singapore property market are actually performing healthy, and it's actually a cycle. So if you are able to hold, then you are able to make the most out of it, right? Okay, so this is actually we put into the table. You are able to see after hitting the the two-digit growth in 2021, then 2022 we are experiencing a 8.6%, and followed by 2023 a 6.8%. Of course, 2024 we end the Q1 and it showed that we have a positive 1.5%. Right, so 2024 still got 3 quarters to go. Based on the data, right now we only have the Q1 data, which is 1.5% positive growth. All right, and because of the pricing, the take-up rate are still there, and government actually find that there's a need to increase the GLS, so they are actually pumping up the GLS supply. So on the first half of 2024, we will be having 5,000 over units of land being actually pushed out. Yeah, so this is something that has increased as compared in the past, right? Last year was 5160. This one actually this year increased to 5450. Yeah. So maybe on the HDB side, after 2 years from 2021, we have seen a consecutive growth of 2 digit. 2021, 2022, I think that is actually quite scary for HDB. Imagine every year 2-digit growth in the HDB market. I think people will not be able to afford. Right, but what I'm trying to show you here is because the market fundamental is still very strong. That's why we are still able to see HDB market performing very well. And of course, 2023, the 2-digit has actually came down to 1-digit growth. And for 2024 Q1, we still see 1.7% growth. Right, so that is HDB market, and with that, of course, our this year market for HDB is still very resilient. So we are talking about Q1, we are having almost 7,000. So by Q4, I think we should be able to on par with all the previous year, right? 20 over thousands shouldn't be a problem, right? And with that, the government also pushed out more BTO because the HDB resale pricing are actually going quite strong, right, in last year. So HDB see there's a need for them to actually push out more BTO. 19,600 units are being built, being pushed out for sales in 2024. Yeah, for this year, right? So they also don't want the HDB to go actually and to go high and make it more affordable for all the Singaporeans. Right. Anyway, we have 80% of residents actually stay in the HDB. Right. So this part they have to be very careful. But strong meaning the market fundamental is good. That's why it's actually doing very strong. And Straits Times a few days ago, 27th of April, also have this report saying that Singapore growth trajectory actually still remain intact. That means our growth forecasts are actually on par to what they have actually forecasted, right? It never deviate downwards or what. So it's actually on track. Yeah, on track meaning I think it's actually a good news for everyone, right? In terms of economic growth, right? So PPI for this, with all these fundamentals, and then of course we are able to do a forecast already. Yeah, that's why PropNex forecast private PPI whole year we will see roughly about 4 to 5% increase. Right, for HDB we are talking about 5 to 6% increase for the index. Yeah, so if we are hoping that the price for property will actually come down, it looks like might not be the chances might not be very high because the cost of building it has actually gone up a lot. Right, so it's not easy, and this year forecast by PropNex is actually 4.5% for private property, and in HDB we are talking about 5 to 6%. Yeah. right? So with that, then we are able to also predict the various segment in Singapore, right? In terms of the new launches, core central region, we are talking about this year, you will be expecting a 3,000 to $4,500 per square foot kind of launching price. Then the RCR, we are talking about 2004 to 2008. OCR, we are talking about 2001 to 2003. And for the EC market, we will be expecting 1004 to 1550. So this is actually the predicted 2024 PSF for new launches across the island in different segments. Right? So what are the factors that actually are popping up the new home prices in 2024? I think these are all the reasons. Right? First of all, of course, inflation actually caused everything to go up in terms of raw material. And I think the main bulk comes from the landed price, because the landed price are still very, very strong. And a lot of developers, they are still fighting for land. Yeah, that's why it's not easy for them to reduce the price to sell, right? Of course, then the next factor will be the GST hike, increase in labor cost, supply chain disruption, and harmonization of GFA definition, meaning developer will not have the bonus extra area to sell when they bid for the land, when they build a condo. So this will be actually under the new rule harmonization of the GFA. So they will not have the bonus space. Unlike the older day, they are able to use the bonus space, and they still charge the buyer, right? So right now they don't have, meaning they are not able to enjoy the bonus space. So they have to sell higher, right? If not, then they are not able to cover their costs. So because of all this reason, today, that's why you are seeing all the new launches, the pricing are still remain at such a high rate, $2,000 over dollars for OCR region property, right? And these are some of the new launches that you are expecting. And look at the pricing. For example, Upper Thomson Parcel B, which is a Springleaf area, OCR. They bid the land for $905 per square foot per plot ratio. And they have to, when they launch, they will have to actually go above 2,200. Or Lentor is the same thing, $2,200. How about Woodland, the Champions Way? They have to sell above $2,000 per square foot for Woodlands eventually. Yeah, then Clementi, we are looking at $2,300 over dollar per square foot eventually when they launch. It's an OCR region. And Lorong 1 Toa Payoh, yeah, this one, I think 2005 to 2007 that we will be expecting for this launch. On Tampines Avenue 11, we are talking about above 2001, right? So you can see average new launch prices for RCR project expected to be 2005 and above, right? Average new launches of OCR expected to be above 2001. And all these are 99 years. They are all 99 years. And today, if you want to buy a 99 years in OCR, even in Woodland in the future, you have to pay more than 2,000. And that's how much the price has actually increased. And mainly because of the landed price was that high. So every developer are fighting for lands. Yeah, because then it costs everything to go up. And that's why expect 2,000 and above for OCR is going to be a norm, and you will not be able to find anything below 2,000 for a 99 years OCR project anymore, right? Okay, so right now I'm going to bring you to some of the data that I have researched to show all of you, right? So you can see from this tree graph, actually show OCR, RCR, and the CCR. Right, you can see the gap between the three region, which is still quite big. RCR, we are talking about 2.5. OCR right now is 2,190, which is quite in line with what we have actually shown you earlier on. and the CCR, we are talking about 3,100. And these are overall, it means it consists of Freehold, 99, all the new launches in the different region. So this is actually the gap and the per square foot that we are seeing today in the market, right? But if we are going to further zoom in, right, into RCR Freehold versus RCR 99. So this is something that we can see the gap actually closed up, right? If I'm only going to study the RCR Freehold and RCR 99 years, we see these two category of project, the pricing actually closed up, the gap closed up. We are talking about 2620 and 2537, meaning RCR 99 years, the pricing actually had called up to RCR Freehold, and they are now actually in the very similar region in the RCR market today, right? These are what the whole numbers are telling us. But of course, I'm going to drill in further, right? If I'm going to do a RCR Freehold versus OCR 99 years, all these are new launch, right? Then we will be able to see a big gap still, because RCR are supposed to sell much more expensive compared to OCR, and it's a Freehold versus a 99 years, right? So you will have the location advantage premium for the RCR, and it's a Freehold. You got a tenure advantage compared to the OCR 99 years. So their price gap is quite wide, which is quite normal. We are talking about 1929 versus 2626. That is the comparison between a RCR Freehold and a OCR 99 years price, right? So this percentage is about 36.13% now. 36.13%, right? The percentage for the RCR Freehold versus the OCR 99 years, right? And if I am going even deeper, right, I'll be able to see these numbers, which is those RCR Freehold, which is less than 100 units project, I compared to the OCR 99 years project. Then I discovered that this category of pricing, in fact, is actually very close to the OCR 99 years price. And this category is actually we call the boutique projects, right? And today we are experiencing only a 14.2% for an RCR boutique Freehold project compared to an OCR 99 years project. Yeah, so this might be interesting numbers for us to look at it, because by right, OCR and RCR have a gap. And now we are talking about Freehold and 99 years. So even they should have a gap. But why at this moment of time, the gap actually become narrow, and they might be actually similar price, right? That's why the average per square foot show they are very close to each other. Yeah, so the next thing I want to ask those people in the Zoom here, do you think RCR Freehold compared to an OCR 99 years, when the price gap close up, is it a very usual or unusual situation? So if you think it's unusual, then can you maybe show a 2 in the chat group? I just want to make sure you all understand what I'm trying to say. 2. Okay, Joseph, good. Josephine, yes. Doris, everybody put 2. Suchi put 2. Sherry put 2. Thank you. You guys are awesome, and thank you for the participation, right? Because I really need to know you guys are listening. Yes. So you see, everybody actually put a 2 when RCR Freehold less than 100 units, which is the boutique category, are actually going close with OCR 99 years price. This, in fact, is a very unusual situation. So based on the experience and the research data that I'm going to show you, you'll understand what I'm trying to say, right? So I pull back the data from 2000 to 2024. Today, the gap is at 14.2. So I look back. Well, the only time whereby the gap is very, very close, or the most close to each other for these two categories, in fact, is in year 2000 period. And that is actually a 15.86%. So year 2000, 2001, maybe up to 2002, this period, in fact, we experiencing these two categories of project, the price gap actually narrowed down. And this is what we call happened in the 24 years ago. No? Yeah, so it doesn't happen every time because RCR freehold supposed to be much premium as compared to an OCR 99 years. Because in terms of location, in terms of the tenure, the RCR supposed to have more premium. That's why in the last 24 years, we have never experienced this gap so close until today. The last time we experienced was 24 years ago. Yeah. So why do I want to actually show you this? Because from here, we want to study when the price gap actually close up, do we stand a better opportunity if we are able to leverage on this? So that is something that we want to drive to show all of you tonight, and I hope all of you are able to maybe pick up something so that it can help you to make a decision moving forwards if you are looking for a property, right? So that is our intention, yeah? And just 3 years ago, in 2021, the gap was 53.48%. 53.48% between these two categories, and today we talk about only 14.2%. So the gap actually closed up, meaning OCR 99 years pricing has actually increased tremendously over last few years. That's why today we are experiencing the gap are being so narrow, yeah, compared to a RCR freehold. Yeah, so this is what we find. And why is it not common? Because of course I already shared with all of you, the tenure already have the advantage. But freehold supposed to be about maybe averagely 20%. 20% compared, or even maybe minimally 15%, okay, compared to a 99 years premium. Yeah, so in terms of the tenure, freehold already has the advantage, right, over a 99 years. Yeah, and of course, the next thing is the location premium. The RCR location normally will come with a premium because RCR is this white color one. They are actually at the city fringe, right? They are closest to city. That's why their pricing or their land cost normally will be much higher as compared to those OCR area, right? As compared to those OCR area. Yeah, so the premium in terms of location is there, right? That's why RCR normally will come with a premium because of these two reasons. It become not common to see these two category of pricing actually are moving so close to each other, right? So that's what I'm trying to show all of you. Yeah, and of course I want to ask all of you, if this is so close for a RCR freehold and a OCR 99 years, is this the right timing to consider the RCR freehold? I'm not saying OCR 99 years is not good. You don't get me wrong, because we have to be very objective. Today, we just want to maybe give you another option of whether, you know, for those people who really love freehold, is this the best timing to come into RCR location to actually get a freehold property as compared to maybe all the while you're buying 99. But I'm not saying 99 cannot buy, right? Don't get me wrong. 99 still have their own, of course, audience, and there's still a needs and demand in their particular location. So there's no right or wrong, but we just want to study whether are we able to leverage and understand that maybe this is one of the best timing if we are considered to buy a freehold in the RCR location. So that is my purpose, right? And with that, I'm going to show you some very interesting facts because I'm going to bring every one of you in the room. I'm going to bring you back to the year 2000. Right, year 2000, 24 years ago, what happened in the market? Right, and that's actually the time I was in the market, and I'm trying to actually use what I've experienced back then in the OCR and RCR. I'm going to actually draw out some of the data to show all of you, right? So sit back, relax. These are some of the very important case study. I hope from here you're able to pick up something, right? So please pay attention, everybody. From now onwards, this is very interesting, right? I'm not actually trying to bring down any of the OCR project. Again, don't get me wrong. But all this we are drawing out to show all of you, and we want to learn something from here, right? Of course, all these projects, our Go project is just in front of MRT in District 23 UT area, right? This is one of the 99 years project. Back then in year 2000, they started selling, right? So it will be under new launch. Yeah. So I have actually put all this together. It's the real data that we pulled out from our investment suite, and it's actually gotten from URA. So the data is going to be very, very accurate. Yeah, but here look very messy. Let me actually try to sum up for all of you. Right, these are Sunflower View, which is the boutique RCR project. These are Rose View in the Street 15, a boutique project. So by looking at all this wording, it's a bit confusing, but don't worry, everybody. I have actually done a table. I have compiled everything so that at one glance, you can see everything. Right, and this is what I did for you, to let you have a better understanding in terms of visual. If not, it's going to be very messy. But the number that I gotten was actually pulled out from those charts that I show you beforehand. Right, look at this project, which is the OCR big project, 553 units. It's a 3-bedroom. Well, they bought it in December 2000. December 2000 at a purchase price of 605. And they sold in October 2023 at a PSF of $981. So this project definitely has a profit by holding onto it, $436,500. But if you compare to the same period, September 2000, whereby a 28-unit project, Sunflower View, which is a RCR freehold location, well, they bought it at $573 per square foot, which is cheaper than the OCR 99. That's why year 2000, the RCR boutique freehold project and the OCR 99 years project, in fact, their gap are closed. And some of them are cheaper like this, cheaper than the 99 years project. And they sold in the same period of year 2023 at 1240. Now, the profit actually went up to 675,000 compared to 436. Of course, the boutique freehold made better profits, right? Because they actually bought it at low entry price. All right, and they sell it when the market, of course, moves up, and the freehold actually eventually moves higher or faster compared to the OCR 99 years project, right? So that we can see it has brought in a better profit compared to the OCR 99. And Roseville in the Street 15, another 25 units project, right? A 3-bed, and this one I don't see any transaction in year 2000. So the earliest I can find was actually 1 year earlier. So we can actually use this one to maybe as a reference, but the number of years might not be so close. But again, it's actually $541, which is still cheaper than the 99 years. Right? They sold in 5 years earlier. So if they keep until 2023, I'm sure they are able to get higher. That's what I'm trying to say. Yeah. So they sold in 2018, and you can see the profit is 825,000. Yeah. So why do I want to show you this? No, I'm not trying to actually bring the OCR 99 years down, but I want everybody to see, is there an opportunity if the timing is right and the price gap is so wide, or no, the price gap is so similar compared to the RCR amount and the OCR 99. They are so close to each other. Is there advantage for us or no? Yeah, so that is the whole reason. Of course, there are people still buy the OCR 99. Go ahead if you need to buy. They are all good project. Yeah, but I'm trying to say that if you are inspired to own a freehold project, is this the right timing? You know, is this the right timing? I think that is something that I really want all of you to maybe take a look at all this case study. Right, so this is year 2000, and year 2001 similarly is also very close. So I'm going to skip all this very messy data, but I just want to prove to all of you, all these data are taken from URA and they are all real. Right, again, I have done a table for you. All this time around, 2001 got many OCR 99 years launches. So we have like from the East Tanah to the Spring Lake, Forest Hill, or to the Tampines. We have the Tropical Spring, right? You can see the number of units are quite big, right? Because the OCR 99 years, normally the project are quite big. And December 2001, January 2001, April 2001, they bought it at 471, 510, 543, and they all sell in 2023, right? So the profit is 598, 594, and 752,000. Yeah, but at the same time, 2001, they are also RCR freehold launch, boutique project launch, right? So we have Chelsea Lodge, 78 units. We have Villa Matia, right, 58 units. They also bought in May 2001, and at a price very close or similar to the OCR 99 years price. Right, because the gap was actually so close. Just now I show you already, 2000, 2001, 2002, the gap, they are all quite close. Right, and they sell it 1 year earlier. If they keep to 2023, I'm sure they are able to do higher. Right, and this guy sell in 2021. Now you can see the profits are actually doing better compared to those people who back then purchased the OCR 99, but those people who purchase OCR 99, of course, they have their own needs, because that's the area whereby they need to live in, right? So this is something that I maybe want you all to take it with you. Just have a thinker. If you want to enter into a freehold project market, this might be one of the best timings for you to consider, right? Because the gap, they are close to each other. Yeah. So this is year 2001. How about 2002? Same thing. I have actually done a research for all of you. This was in Woodland, a 3-bed. Right. 2002, they bought 473. And they make a profit of 395. So in 2022. Right. At the same time, in 2002, Cozy Lodge and Central Meadow actually launched in the RCR, and they are all boutique projects, freehold boutique. And they bought it actually similar to the OCR 99 years, or slightly above, because the gap is very close, slightly above the OCR 99 years. They sold in 2023, and look at the profit they make. It's actually way much higher, because I think one of the reasons is actually freehold, and it's an RCR location, so definitely the price has to catch up, right? And eventually those people who go in low, and when the price catch up, then you are able to see a better margin. Yeah, so that is something that quite interesting, right? When the gap actually close, maybe it's the right timing, and one of the timing that really, if you really want to consider boutique freehold in RCR, this might be one of the best timing after 24 years of waiting, right? So very good. And this is a chart that I draw out just to show you RCR freehold boutique is at this position right now. It's at this position right now. And you are already far away compared to the rest of the category in the even a 99 or freehold in RCR or CCR. The price is very far away from them. Yeah, so you see the huge price gap. Yeah, so huge price gap meaning there's opportunity. Yeah, so it depends how you want to take action or how you look at it, right? And it's a premium region freehold tenure, and I will say that RCR freehold boutique at this point of time, we don't even talk about how much you are able to make profits in the future, but I'm trying to say that it is very safe because once you enter now, there are so many things supporting you, the OCR 99, the RCR 99, the RCR big freehold project, they are supporting your price now. So it becomes very safe for you. Anything happen to the market, you will not be the first one gonna hit by the market, if should anything happen now. So that's what I'm trying to say. And it's safe. Yeah. So it might be the best timing for you all to actually consider, right? Because we have this unfair advantage